Hey, good morning, good afternoon, good evening, wherever you may be. Scott Luton here with you on Supply Chain Now. Welcome to today's special live stream. Folks, today on Breaking News Now, we're going to be featuring one of our favorite all-time industry analysts, especially when it comes to transportation and logistics. So stay tuned for actionable perspective on not just 2025, but what to expect, a little sneak peek of what we might see in 2026, especially from a truck, rail, and ocean freight standpoint. Before we get into the interview, though, I want to share a quick resource with all of y'all out there. I want to make sure that our almost weekly newsletter, with that said, is on your radar. It offers an almost weekly digest of resources, tools, and views, as well as our upcoming live shows here on Supply Chain Now. You can check out the link in the chat and be sure to subscribe today. Okay, folks, we got one of our faves back with us here today on Breaking News Now. I want to welcome in Lee Klaskow, Senior Analyst, Transportation and Logistics at Bloomberg Intelligence and host of the smash hit Talking Transports podcast. Hey, Lee, how you doing?
I'm well, Scott. How are you? Thanks for having me on.
Great to be here. You bet. It's great to have one of the best in the business back with us again. We've been.
What's this one of?
I got to strike that, huh? I got to say the best in the business.
There you go.
Comes with a championship belt like Ric Flair would be proud of. But ever since we sat down together, along with Chris Barnes, I bet it was 2019, our audience has really enjoyed your perspective and expertise, and it's great to have you back.
It's great to be here. Thanks for having me again.
So let's do this. We want to kind of break up your perspective in three buckets, and they're not three new buckets. Three buckets you've been analyzing, watching, and sharing your perspective on for a long time: rail, trucking, and ocean.
Mm-hmm.
And let's start though with rail. Let's start with some of the biggest developments that we've seen here in 2025 in the rail industry.
Yeah, so from a demand standpoint, it's really been all about the tariffs. We had some pull forward demand in the beginning of 2025, and that kind of tapered away. Shippers were trying to get ahead of any tariffs because we didn't really know what the tariffs were going to be. Some people still don't know what the tariffs are going to be because they change on a daily or weekly basis, and then so that just creates a lot of inventory, and manufacturing and industrial and retailers have to work through that inventory. So the demand kind of waned in the second half of the year. You also had something, export coal was really strong for the rail industry, and that also weakened a little bit just because of the global market. The prices made U.S. coal a little less competitive on that global market.
Very interesting. No shortage of activity. Let me ask you about this before we get into your snapshot of what we may see from a rail perspective in 2026. We've got a potential historic merger, I'd call it. Union Pacific might just acquire Norfolk Southern. I think it's in front of regulators as it stands. There's lots of takes out there, whether it's going to happen, not happen. Your thoughts on this big potential merger?
Yeah, when it was first announced, I'd say we were pretty skeptical that it would happen. I think we put a 30 to 35% probability on that. Now we're up to 55 to 60%. That's really been driven by the Supreme Court has been signaling that the Trump administration, they're allowed, or the presidency can fire folks in independent agencies within the federal government, and the STB would fall under that preview. And so, there was one member of the STB that was fired, and he is fighting that in court, but it's also worth noting that he was one of the few members of the STB that did not approve the CP-KC merger a couple of years ago. So, if they could get somebody in there that's more friendly to consolidation, that would just increase the probability. And, like I mentioned to you earlier, I might be a little naive, but, I'm hoping that the STB does their job, and they have to, in order for this merger to go through, it has to be proven that the combination would increase competition within the rail markets, and it also would be in the public good. And those are pretty high hurdles that they have to overcome. So, we would say that we're probably on the skeptical side, but that skepticism is kind of waning as well.
Yes. And let's see. And a lot of folks were predicting would take 2 years or so for this proposed merger to play out. And I think we're still under a year in. So we still may have a little time before we get the final outcome there, huh?
Yeah, I didn't actually check this morning, but UP hasn't actually officially filed it yet. So once they file it, which should happen, I think next week, the clock really starts to tick. And the reality is, it probably won't get a decision until very late 2026 or maybe 2027. That's our best guess.
Okay. And you mentioned the Supreme Court earlier. They've got a bunch of decisions they've already weighed in on. They've got a bunch more coming next year. You might be hard pressed to find a year where the Supreme Court weighs in on global supply chain with big ramifications than you have maybe in this stretch coming up. We'll see. What else beyond that, right? I'm not a judicial watcher too often, Lee. But when you think about the rail industry in 2026, what else should we all be looking for?
Well, I think the consolidation story is probably the biggest one, but it's really about tariffs and where tariffs are going to go. Also, the U.S. USMCA, sorry,
Right.
it probably is going to be renegotiated, and that could have ramifications, especially as it relates to the auto industry and the forest product industry. So those are things that we're kind of watching out to see if there's any tells on how that might play out. Obviously, U.S. And Mexico and U.S. and Canada, very huge trading partners, and we think that an agreement should come that would hopefully be a win-win-win situation for all the countries. And the stability is really what you need for supply chains to run smoothly, and for capacity providers to really properly source their networks, whether it's a railroad or a trucking network or an air network.
Yes. And speaking of the USMCA, January 2nd, I believe, the White House has to report to Congress what their intentions are, whether it's renew or go in a different direction. So it'll be interesting to see what cards we see played on January 2nd, huh?
Yeah. I missed NAFTA. That was easier for me to remember for some reason. I don't know why.
Well, one of the reasons, Lee, is it just dawned on me yesterday reading some Canadian news stories. In Canada, they switch up their acronym, and it's CUSMA. And I got through 3/4 of the article. I'm like, is there a trade agreement I'm missing? And then it just dawned on me. I realized that the letters have just been moved around. Anyway, so NAFTA was easier, huh?
It's like the Gulf of America, right? You can call it whatever you want to call it, depending on where you live.
Oh, gosh. No comments. Okay. So let's talk about trucking, right?
Okay.
I'll tell you what a year in trucking. Some of the biggest developments in 2025, truckload, LTL, you name it. Your thoughts, Lee?
Well, the trucking is at Bloomberg Intelligence, we're a research arm of Bloomberg. And so, I always look at things through the market lens, and the trucking industry, they've vastly underperformed the S&P 500. Trucking stocks are down around like 11% year to date, where the S&P is up in the mid-teens. So they've vastly underperformed. And the reason they've underperformed is the demand hasn't been there, and we're continuing this freight recession, which, we're entering a fourth year of, and that's really weighed on rates. It's weighed on rates in the truckload space. LTL rates have been a lot more resilient. They've been increased by mid-single digits, but you've seen tonnage come down a lot, and that's really deleveraged of their earnings and margin capability. So that's been a big headwind. Looking forward, there's a lot of things. We started talking about the Supreme Court, but the federal government is also looking into trucking. I mean, their reasoning is to improve safety, which we can all applaud. But to do that, they're being more stringent with non-domicile CDLs, which are roughly around 200,000 of them in the U.S., and then also making sure that the states are enforcing English language proficiency standards that they have for truckers, and that could take out anywhere between 7 and 15% of the trucking population if that were to happen. Obviously, to those people, it's terrible because they lose their livelihood. But for the market, it would be a good thing for capacity providers, because rates have been pretty you know, flatlining, if you will, this year and down years past. And the rates really aren't where they need to be for whether you're just an owner operator needing to generate some income for yourself and your family, or a large fleet like a Werner or a Heartland to kind of earn that ROI that you need to invest in your fleet. And by investing in your fleet, by buying refreshing your fleet every 3 years, which what most fleets try to do to ensure that they're operating efficient and low cost trucks. So I think. So if you talked to me in the summer, I was probably as negative as I possibly could be on the trucking industry, and I'm an Excel side analyst, so I'm inherently more of a glass half full kind of guy.
Right.
And it's usually something like maybe a good glass of wine or something like that. But um, you know and then fast forward to today, because of what the federal government is doing and some other things with new ELD standards. It really is going to have an impact on capacity, and we think that a recovery in the trucking market is going to be driven by the supply side. I think if we are going to surprise on the upside, it could be on the demand side. But I think any recovery is really going to be driven by the supply side, and it looks like that could shape up. And that's not going to, like, all of a sudden tomorrow, like, rates are going to go up 20%. But I think you could see some significant tightening in the second quarter to set up a very good second half for the industry, which could drive earnings and revenues much higher next year for truckload providers.
Outstanding. I'm going to call out two things. When you think about next year, 2026, you've already shared some things to look for, but I want to call out a couple of things in particular. When it comes to truckload, I think you referenced this, but carrier exits. We've seen a good bit of that here in 2025. We're going to keep our eye on that as well next year. Your quick comments there?
Oh, I mean, I think you're going to see more and more exits. I mean, because it's like I mentioned, it's tough to earn a return on your investment. So if you're not making an economic profit, or it's not worth for you to reinvest into your business, you're just gonna walk away. And we've seen that. 10 Roads was a large U.S. postal service provider that recently called it quits.
Yep.
And I think you can see more of that. And you also have seen, and this isn't necessarily calling, oh, this is the bottom, this is where it's going to go. I'm sure most of your listeners are fans of Freight Waves, and they've been out with talking about how on their system, their Sonar system, tender rejections have hit some a historical high, or have increased significantly, and that's usually an early sign that the market could be turning.
So a couple of quick things that will definitely impact truckload and LTL and other forms of trucking. The housing market, right? What does that not touch, right? The industrial market in particular, but also specifically, man, the Mexican manufacturing market, industrial market it's been a rock and roll star here in recent months. And we're still waiting on, Lee, we're talking about this pre-show. We're still waiting on, I think you had a great stat, 35 out of the last 37. What was that number about the ISM?
You got it. You got it.
Okay.
35 out of the last 37.
Sometimes I need some training wheels.
Yeah.
So 35 out of the last 37 ISM purchasing manager indexes, which often, it targets the manufacturing index, right? Activity index, all showed contraction. Is that right, Lee?
Yeah. And that's the ISM manufacturing index is kind of a good indicator for LTL demand. Because it looks at industrial production and manufacturing, and that is the majority of LTL. Even though retail has been winning share of LTL, just given e-commerce trends have helped on the LTL side.
Yep.
But that needs to go into positive or expanding territory, which would be over 50 for a couple months for us to get a little more excited about the demand. And as you mentioned, housing plays a lot into that, because housing, obviously, if you're buying a new house, you're probably filling it with new stuff, and you need to buy new stuff. And the housing market also impacts, rail demand, and it also impacts truckload demand, especially on the flatbed side.
Yep. So we should all be big fans of the housing market. We should be big fans of the automotive market. We should be big fans of the aerospace market. I know there's a bunch of folks pulling for Boeing's very successful turnaround. It's amazing the role it plays in the U.S. economy, global economy, the U.S. economy. Okay, so let's talk about ocean shipping, Lee. Let's first tackle what you saw, the key developments here this year before we look at next year.
Yeah, so the ocean is a similar story to the rail. There was a huge pull forward demand the first half of the year, and it kind of dried up. That pushed rates up, and it started pushing rates started falling down, and also helping rates was obviously the risks in the Red Sea due to the Houthis. Container ships are probably, especially the large ones, probably carry the most valued goods relative to a oil tanker or a dry bulk carrier, and so to insure those ships, it's very expensive. So a lot of insurance companies would either just charge an extraordinary amount of money where it wouldn't make sense for someone to buy that kind of coverage to go through the Suez Canal, and obviously most capacity providers or ship owners, they don't want to risk their own assets. They also don't want to risk their crews, and so they've been avoiding that and going around Africa, and that increased going to Europe from Asia by 10 to 15 days. And that took a lot of slack capacity out. And that was a good thing because, supply growth has been outpacing demand for a while. That's expected to happen over the next 2 years as well. And that's just going to put pressure on rates. And when the Suez Canal does open up, assuming it can, it'll really be driven on what's going on in the Middle East between Israel and Hamas. As long as that ceasefire holds, the Houthis probably will not target commercial vessels in the Red Sea anymore. That could have a pretty interesting impact. The short term, it could create a lot of congestion, which would maybe push up some rates. And then that would probably give way to the supply demand dynamics pushing rates lower. Net we're pretty bearish on liner rates in 2026.
Yep. So speaking of next year, you already have been offering some implications there. Would you say that 2026 is more about survival for ocean shippers out there, ocean carriers rather? Would you agree with that? And what else are you going to call out for us to take keep an eye on for 2026?
Yeah. So survival is an interesting term. I wouldn't necessarily go that far. I think some can generate an economic profit, but it certainly is not going to be breaking any records for the most earnings that they could have. You'll probably see earnings decline for a lot of the liner companies, and revenue obviously would be declining as well because of the lower rates. I mean, I think I just read recently, I think S&P just came out, they expect 2% container growth in the U.S. next year. So we're not talking about any exciting growth. I don't really think they really went out on a limb that much because I think that's where consensus has GDP. So, if you're talking about GDP growth of low single digits and rates that are going to continue to go under pressure, they're still above break even, but they're getting closer and closer to that break even level.
Outstanding, Lee. A lot of good stuff there. Folks, I told you, one of the best in the business.
There we go.
The best in the business. We're going to come up with a championship belt and send it your way, Lee. Okay. Now, this is just the tip of the iceberg. Folks, you got to connect with Lee Klaskow across social. You got to tune into the great work that he and the Bloomberg Intelligence team does. We're going to talk about his podcast and a weekly index of can't miss data and perspectives here before we wrap. But first, we covered rail, trucking, and ocean. What's any big points that we missed, Lee, that you want to share here before we shift gears here?
Well, I think the biggest unknown is what technology productivity tools are going to do to offset some of the headwinds that all these subcategories are facing. We are obviously in very early innings when it comes to AI. I think one of the poster childs for using AI within the transportation space is C.H. Robinson. They've been aggressive with their implementation of AI and LLM models,
Yep.
and that along with their focus on lean management has really helped turn around a company that was kind of like lost its way, and it seems like it's finding its path again to earnings growth. So I think that there's a fog over the success that they've had there because of that really challenging backdrop that they're facing.
Well, Lee, I am so glad, and we're going to keep our finger on the pulse of what the C.H. Robinson team is doing. I'm so glad you mentioned AI. It gives me a great segue before we get into your podcast. You've been doing great work there.
Thank you.
I want to share, you bet. I'm going to share, folks, we're all about sharing resources, especially when it's dispelling the hype, right? And all the noise. You got to check out our new resource hub over at supplychainnow.com. So updated almost daily. You're going to find great reads like this one from Corinne Bursa, who spent over 20 years in a Hall of Fame supply chain tech career, still doing big things with organizations. And she shares a couple of key thoughts from a panel of senior supply chain leaders on what the topic Lee just brought up. That's on the lips of every supply chain pro out there, artificial intelligence. How can we move from hype to outcomes? Give a read to this blog here and let us know what you think. Okay, Lee, let's talk about Talking Transports, the latest. Okay. You're like the Motown of supply chain programming. You've had some great hits. First off, what episode number are you on? And then also tell me some of your favorite moments.
Some of my favorite moments. So we're on episode, we just published episode 117 this morning. And it's like, I think I was joking around earlier. I do have a favorite child, but I'm not going to necessarily tell you who that is.
Right.
And I do have some favorite episodes, but what I like most about it is the ability to talk to a lot of interesting people about something that I'm passionate about, which is the freight transportation markets. And that can be, a CEO from a publicly traded company, a CEO from a tech startup company that's trying to, implement some AI technologies into supply chains, and then everything in between, from academics to lobbyists. So it's been a lot of fun, and I've also helped me learn a lot, and that's kind of like why I started a little over 2 years ago. And it's been a fun ride, and for those that are interested, you can catch it anywhere where you find podcasts, like Spotify, Apple, or Bloomberg.com. And for our subscribers of the Bloomberg terminal, it's available there as well.
Outstanding. A lot of great work. And congrats on 117 episodes. Folks, y'all may not know, in this era of digital media, which is a wonderful thing. I love the democratization play that's alive and well. But I think it depends on what source you look at. There's over 4 million podcasts, and the 99% of those don't get past episode 10 because it's tough to churn out quality content and content that resonates with folks.
Yeah, this is a weekly one we do, and it comes out every Tuesday. Today's was the last one for 2025, and we're going to start again January 6, 2026.
Outstanding. You said it comes out every Tuesday. Is that what you said, Lee?
Yeah, every Tuesday morning.
Great. Good
Eastern
stuff.
Time.
Folks, check out Talking Transports with the one and only Logistics Lee Klaskow. But hey, one more thing.
Sure.
Lee, that I enjoy each week so I can talk your language better. That might be a losing effort there for me. But the weekly Logistics Lee Lowdown. I love that name. What is this, and how can folks check it out?
Yeah, so this is, for people that aren't necessarily subscribers to the Bloomberg terminal. We kind of give a taste of our research. It kind of highlights some of the things that we were focused on during the week. Just high-level summaries of things. If those people are interested in receiving it, you can just reach out to me on LinkedIn. I do need a corporate email address, and you have to be based in the United States because we have some compliance issues that we have to deal with here. So if you can check those two boxes, please feel free to reach out to me on LinkedIn to be added, and might as well connect to me on LinkedIn as well.
You must. It is good stuff. I've been fortunate to know and learn from Lee for a long time. I don't know if we were talking about this in the pre-show, or if we were talking about on the front end. I think 6 years ago when we started collaborating here and there, and I've really enjoyed your perspective.
Feels like longer than that.
It does, doesn't it?
Yeah.
Like at least 15, but 6, I think, Lee.
6. Okay. When did Supply Chain Now start?
It was about a year prior to that. So
then yeah, you're right.
So, but you know what? We're moving into our 7th anniversary next year, Lee.
Congratulations.
Of our collaboration marriage. I don't know if that's a thing, but hey, big things, certainly big opportunities abound next year. All right. So we've already established, if folks want to connect with you, you can find Lee Klaskow on LinkedIn, really all the socials, but LinkedIn is where you spend, would you say, most of your time, Lee?
Yeah, I would say that. I mean, I would say that I'm mostly on LinkedIn. I'm on X, but I don't get much traction on X.
Well, we are dropping. We got your LinkedIn right here. Your folks one click away from connecting, following, you name it. And you heard Lee. That's how you can get if you qualify to those check boxes Lee mentioned. That's how you get on the lowdown distribution as well, and that is not to be missed.
Hey Scott, do you know something?
What?
The 7th year anniversary. I just Googled this. Is our wool anniversary. So. So I'll get you maybe a sweater or something like that.
Okay. All right, man. That is quick.
Yeah.
I'm going to have to check out JCPenney is where I'll maybe find a wool sweater for you. Lee,
super.
I'm not even sure if JCPenney's around these days, but kidding aside, I appreciate, as always, your consistency, your finger on the pulse perspective. And you can take a lot of not all of them, but you can't take all of their prognostications to the bank, but you can take more of Lee's than most folks out there. So Lee Klaskow, a pleasure to have you here. Lee from Bloomberg Intelligence. And folks, make sure you check out Talking Transport's a podcast available wherever you get your podcast. Lee, thanks so much.
Thank you. And happy holidays, happy healthy new year to you and everyone listening.
You bet, folks. Hope you enjoyed and learned from this conversation as much as I have each and every time with the one and only Lee Klaskow. Hey, the pace of business, especially the pace of business velocity, it's only getting faster and faster. You got to stay informed by turning to trusted sources of sound information analysis, just like Lee here from Bloomberg Intelligence. And be sure to tune in to Supply Chain Now wherever you get your podcasts as well. With all that said, Scott Luton here on behalf of the Supply Chain Now team, challenging all of y'all, do good, give forward, be the change that's needed. And we'll see you next time right back here on Supply Chain Now. Thanks, everybody.